Hi, it's Emma from MaternityMoneyMaker.com and welcome back to this series of short videos designed to help you get over the barriers that are stopping you starting a business and to help you take action towards building a new and better future for you and your family. In this video I'm going to just explain the difference between the three main types of business structure. That's the sole trader, limited company or a partnership. There are some other ones as well, but these are the three main business structures I find that new startups will use, and a version of them is usually suitable for anybody starting a business. So a sole trader is also known as a self-employed person. Okay, so if you set up a business and you're going to work for yourself on your own, and you are going to provide services maybe from home, or you're going to sell products from home, or in an office. You can have property as well, you can have premises as well. You might decide to set up as a sole trader, and what that means is you are your business. Okay, you register with Revenue and Customs as being self-employed, and you are your business. So if you owe money to a supplier, if you buy building materials, for example, from a supplier, and you owe them £1,000, you owe them that personally, even though you might have bought it for business purposes and you might have bought it out of your business account. You will still be held personally responsible for that debt because you are your business. Okay. Likewise, if somebody else owes you money or owes your business money, if you are a sole trader, a self-employed person, they owe you that debt personally. Okay, so that's the main difference. Now, as a sole trader, you register with Revenue and Customs as a self-employed person, and they note their records that you're going to have to fill in a tax return every year. Now, I won't go into the tax and national insurance implications here, but you are taxed quite similarly to people who are employed. So you pay tax and national insurance in a similar fashion to people who are employed. And you do that by filling out a tax return at the end of the year and paying over the tax and insurance, tax and national insurance that Revenue and Customs calculate on your profits. Okay. The second one is a limited company. Now, I find a lot of clients, accounting clients in particular, come to me because they've set up a limited company very quickly. You can do it really quickly online now. Very easily and for a very small amount of money. Somebody's told them that it's a good idea to set up a limited company because you save tax, so they've set it up. Now, setting up a limited company is completely different to being a sole trader. If you set up a limited company, it is an entity in its own right. Okay, you are nothing to do with the limited company. If you set up a limited company, it is completely separate to you. Okay, so if I set up Hague Limited and Hague Limited owes some suppliers some money, I don't owe it personally, it's the limited company that owes it. I'm completely separate to the limited company. If I was a director of the limited company, I then become an employee, so then we get start to build relationships that way, but it's completely separate, and it must be treated completely separately. Okay, we have to have a separate bank account. The company has to have its own bank account. It's not your money, it's the company's money, so you can't use it for personal use. You can't use the bank account for personal use. It's just completely separate. And you really need to look into this before you set up a limited company, because there are so many complications with it that people don't realise when they set it up. You'll pay a lot more for accounts for a start, because limited company accounts are a specialised service that accountants provide. So you really need to look into it before you set up a limited company. A partnership is two or more people who join together as sole traders, if you like, as self-employed people. So if two people decide they're going to start a business together and they both want to be treated and taxed as being self-employed, they can join what's called a partnership. and you're treated similarly to as if you were self-employed, but you have a business together. Now those 3 different structures all have very different tax and national insurance complications. They have lots of administrative complications, different ones, so you need to speak to an accountant. You can research it online, you could speak to a coach. You need to get some advice before you decide which one you're going to do. They won't tell you which one to do, but they will give you all the information that you need to make a decision, and that's really important. Quite often, setting up as a sole trader to start with is fine, and it will suit a lot of people, and you can always change it to a limited company later if you want to do that. But again, you need to research it, you need to get advice, or research it online. You can go to www.hmrc.gov.uk, that's the Revenue's website. You can also go to www.gov.uk, that's the government's website that provides information on this kind of thing. But don't just decide, and certainly don't just set up a limited company without taking advice first.